The views and opinions expressed in this podcast do not necessarily reflect the views or positions of ACUMA, its board of directors, its management staff, or its members. The podcast discussion presented is conversational in nature and for general information only.
Hello and welcome to ACUMA's On Point Podcast, a series focused on sharing the stories of people who are making a positive impact in the credit union mortgage industry. I'm your host, Peter Benjamin. Today, my guest is Beth Eller, Senior Vice President of Mortgage Services with Truliant Federal Credit Union. Beth, how are you doing today?
I am doing absolutely fabulous, Peter. Thank you for having me on the show.
Oh, it's my pleasure. My pleasure. I've been looking forward to this conversation. I'm a big fan of yours. Been really fascinated with you and the things that you do for our industry. And I'll dive into that in just a quick bit. But before I do, let's bring Cameron in. Cam, what's all the latest and greatest happening over at ACUMA?
Hey, Peter. There's a ton going on. I mean, we have lots planned for 2024. Our regional summits registration for both of those are open now. So we have one happening in March in Phoenix, another in Orlando in April. So if you aren't registered yet for those, definitely check it out. Then we also have our workshops. So registration should be opening for those this month. We have one in May in Nashville and then another in Denver in June. So lots of fun things coming your way, and we're super excited.
Yeah, I mean, so last year, 2023, was the first year we did the summits, and yep. I loved them. Love the afternoon of the executive roundtables that we had, not executive roundtables, but roundtables discussions that we had with the attendees. It was absolutely fascinating and really blown away about the engagement, as always. Now, the workshops, I've shared this with you and rest of Team ACUMA, and I'm pretty sure I've shared it at some point on this podcast. The workshops hold a special place in my heart. They are the ones in my mind, they are the events in my mind that are by far the favorite. Yeah, annual is an amazing event, and we put that on flawlessly every single year, and it's the big party that we throw on, right?
Right.
But I fell in love with ACUMA at a workshop. I feel as though that is where you get all the great benefits of conversations and topics and content and speakers that you would get from annual, just in a more condensed version. So I'm really excited for us to open up registration for those. I mean, I think in the next week or two or so, right? We should have registration open for them, right?
Yeah, we will. And I agree. The collaboration, I mean, at the summits and as you said, the workshops are just great. So really looking forward to those. And also we have lots of webinars and of course other podcasts like these. So Stay tuned for those as well.
Awesome. Thank you, Cam. Don't go too far.
I won't.
Beth. All right.
Peter.
So I started off by saying I've been fascinated with your career and loved watching you kind of do everything that you do for our industry and your credit union. And so I've been really before even becoming president with ACUMA. Now, you were someone that I met. I want to say I probably met you in 2018 or something like that.
Yep.
And I've just watched you do amazing things. And for me, I was really excited about this conversation because in my opinion, in my humble opinion, you are the perfect example of the best that the credit union mortgage industry has to offer. The perfect example. You're passionate about what you do. You are extremely good at what you do. At the same time, you also recognize that as credit unions, we need to move the needle forward. We have to revolutionize what we do and really focus on brighter futures. I mean, you have been instrumental in implementing e-closings and the whole RON process in the state, your state of North Carolina, which I'm absolutely fascinated about, and really being, at the front and center of pushing that agenda forward, which I think is absolutely amazing. So really excited to be here with you. Really excited. again, hold you in high regard. So the pleasure really is all mine, just having you here.
Oh, thank you, Peter. Those are such kind words you say. And I am actually honored that you would think that, and to have me on the show to be with this group any day is just a home run for me. So
There you go.
I'm excited to talk.
Love it. Love it. So I gave a quick synopsis of what you do and who you are, but do me a favor before we dive into today's conversation. And I think it's a good conversation that a lot of our listeners, kind of struggle with day to day, but walk us through who you are. Who's Beth Eller?
I am a 36-year mortgage industry veteran. I got out of college a long time ago and started a job as a temporary receptionist at a mortgage company. And from there became a processor and then an originator, and then moved into management back in about 2001, and moved into the credit union world about 4.5 years ago, and absolutely love this space. Our CEO here, Todd Hall, and I worked together at BB&T in the mortgage group back in the late 1990s, early 2000s. And he asked me to come over to Truliant and help really develop and grow out a residential lending arm. And it has been a lot of fun. It's been a lot of challenge in the last year, as you can imagine. But we've had a really good run in the mortgage space, and do see a bright future ahead. Sometimes I think in these difficult times, it's where you really kind of batten down the hatches and start to look at how you can improve your processes and what you can do to make things run more efficiently. And are there new things that you can adopt and look at? So I love change. Having said that, and I think that's an important part of being in the mortgage industry too.
Oh, yeah. It's, if the mortgage industry has taught me one thing, it is that you have to stay on your toes, right? And you have to evolve. And I'm sure, like me, you're very similar to this, that when you first started at Truliant and you'd ask that question, because I thrive in a change environment. I really do. If I'm not changing, I'm not growing.
Right.
I'm sure it was like nails on a chalkboard when you walked into Truliant and you asked questions. They're like, "Well, we've always done this way." Right?
My least favorite words: "We've always done it this way." My team knows that now. Yeah. If someone says we've always done it this way, that means I'm going to start looking at it and figuring out what we can do differently.
Oh yeah, it's like, just give me an excuse to find something else to work on, because that's exactly what's going to happen, right?
Yeah, absolutely.
So I think this is good transition to today's conversation. Today's conversation is really focused on the changing landscape of lending, more specifically mortgage lending, right? With deposits being such a priority for credit unions across the country, we obviously, the liquidity issues that a lot of credit unions have, not all, a lot. As we focus on deposits, and I can appreciate how important deposits are. Right, I'm not taking away anything from that, but let's dive into how does that really going to affect lending, mortgage lending, if we start focusing our attention elsewhere and really putting that on the back burner? What are some of the negative side effects that you're seeing and what you think about? But also, how can we turn that corner? How can mortgage stay front and center, not just within the credit union as a whole? From a leadership standpoint, it's our responsibility as leaders within a credit union. It's our responsibility to beat that drum, right? We have to make sure that our departments, our divisions do not get forgotten, right? But at the same time, there's also the membership aspect. How do we focus on or beat that drum so our members don't forget about us? So let's dive into that. So what are your thoughts on it? So what's happening over at Truliant? Let's start with that.
We've kind of gone through a variety of scenarios here. Earlier in the year, midsummer, we started trying to sell everything service retained that we could. We're Fannie Freddie Direct, except for our govies, and as opposed to portfolioing loans. And so our strategy, we flip-flopped 2 or 3 times over the course of 2 to 3 years of, do we sell service released or service retained, or do we just service and put all in portfolio? And Currently, our strategy, probably through a good part of 2024, is to sell everything to ourselves, to portfolio everything and keep it service retained. And that's because of the yield right now that we're able to get on residential mortgage lending loans. And you compare that to like indirect auto or even direct auto and the effects that CECL has on loan loss reserves, and all that's coming into play in the credit union world now too. And so in some ways right now, mortgage assets to me are more valuable than they've been in the past because of the loan loss reserve. But you've got to balance that out with the loan to share issue and your liquidity issue, and what can you do in that regard. So we're all seeing any financial institution right now is chasing dollars. Everybody is chasing deposits. And Truliant certainly has put out several CD issues with really competitive rates. And we've come out with a high yield savings account. We've done a lot of things to try and get stickiness in our deposits, and hope that will work into 2024, because we believe that 2024 will be even more difficult to get deposits in the door. So we've done a pretty good job there, but
and I'm sorry to jump in, but and you mentioned a whole bunch of stuff. I kind of want to peel back the layers a bit and dive in.
Sure.
I agree. Stickiness when it comes to deposits is very important, and I agree that 2024 has already presented itself to be a year that's still going to continue to be difficult to get members to deposit. To really focus on savings and deposits, right? Some that can be tied to inflation, right?
Yep.
I don't know why I just thought of this, but I just did. Inflation is so bad, and this is not a joke, right? It truly isn't a major issue as to why people are not able to save the way that they used to. It's because, like, have you heard of the Home Alone Index?
No, please share it with me.
I heard about this for the first time around the holiday season this past, I guess, about a month and a half ago. It was, again, the Home Alone Index. It compared when Kevin McAllister, he, of course, I won't do a synopsis of what Home Alone is, but Kevin McAllister, Macaulay Culkin, went to the grocery store or whatever that local market was in his hometown, and he bought, things like macaroni and cheese. He bought a toothbrush, stuff like that, right?
Candy.
Yeah, candy, right. He bought some random things, right? And that was his attempt to be an adult, right? So the Home Alone Index compares how much he spent on all the things that he bought, and it was like $17. And then when you compare that to what that same exact purchase would cost, and again, this was at the end of 2023, it was like $72.
Wow.
So it's I don't know why I'm telling that stupid story, and I'm sorry, but that's the whole point of this ACUMA On Point podcast, is that I tell stupid stories or use bad analogies or give really bad examples. But anyways, it is becoming more and more difficult for our members to save money, right? And
agree.
There is a small little runoff, right, related to inflation. Not runoff, but walk off when it comes to assets decreasing, and our members and the amount that are the dollar amount that the average member saves. There's a walk off, and I think that the things that you're doing is fantastic. And I love that you brought in CECL, right, the loan loss reserves.
Mm-hmm.
But at the same time, you're right, loan to share ratio, right? There's a big difference between a $500,000 mortgage and a $20,000 auto loan, right?
Right.
Big difference.
Big
right?
difference.
And granted, I say $20,000 auto loan. Let's be honest, cars aren't that low anymore. That's more like $80,000 right at this point in time.
Probably so.
But so I love the things that you're doing. So if you're focusing on, so it seems like you guys are really looking towards, okay, let's portfolio some stuff, right? Let's portfolio our mortgages, right? How did you get to that point where you said, all right, we're not going to sell, right? And admittedly, that you could argue that credit unions not selling their loans in the end of 2019, 2020, and 2021, credit unions not selling during that time frame when interest rates were historically low. that kind of caused some liquidity issues. So how did you make that? How did that conversation go with you?
So, those things are an ALCO decision.
Sure.
And I do sit on the Asset Liability Committee, ALCO here, and discussing what assets it is that we want on our books for any given period of time. And we have a philosophy here of being very fluid. So it's not a problem to me if we portfolio loans for a 4 or 5 month period, and then we decide to sell loan service retained for a time period, or even service released if that's what we decide to do. I know in credit unions, service released is, kind of a sticky point too.
No, I love that. I love that. Nothing made me more happy when I was able to start selling loans off with servicing release.
It has its benefits.
It does. It does.
It does. But so really in looking at CECL, which is current expected credit loss, we really started to value a mortgage versus, say, an indirect auto loan and what you have to set aside in anticipated reserves for those other types of loans. So you really start to look at what types of loans do you want on your books. And another big factor, Peter, that feeds into our conversation is kind of the credit environment that we're in with the economy, and concerns over how assets are going to perform. And typically, as we know, the assets that are probably going to start to have problems first are unsecured loans, credit cards, car loans, and you hope mortgages being one of the last things that would have problems. And we're not seeing huge upticks in our losses here, but we also are very aware of the pressure that our members are under. We're a low to mod designated credit union, and we're about a little over 5 billion. So we're pretty significant in size and all things considered. But we have to pay attention to our member base and know what that looks like as well. And, the numbers that have come out recently on the economy look like inflation is kind of at a hold for where we are right now. Do we hope rates will come down in 2024 late in the year? Sure, we do. But I think for now, we felt like the best thing we could do would be put these loans into portfolio with the good yields that we have on them.
Is that giving you some flexibility when it comes to underwriting, or are you having some flexibilities?
We have a pretty broad underwriting suite of portfolio products. I mean, we have a 100% product. We have a 97% purchaser refi. We've got a limited credit product. We have an I-10 product. We do jumbo lending. We do construction perm. So we use the portfolio appropriately, but we also do have an exception process. If we need to do that on loans, if we've got an unsellable loan, we'll look at it and make a decision that works best for the member and for the credit union overall.
Now, during this time, obviously 2023, really 2022 was tough. 2023 was equally, if not harder, right?
Yeah.
2024 is really not starting off. I guess it's starting off a little bit better, but still pretty tough all the same.
Yep.
Did you guys ever stop the conversation or pause the conversation about mortgage with your members, or did you kind of continue the conversation of, hey, we do mortgages, don't forget about us, come to us? Or do you feel like your membership kind of sort of knows it?
For Truliant, the mortgage department has been a build up since 2019. And so that was pretty easy. In 2020, 21, and even into parts of 22, there was so much consumer demand. You didn't have to do a lot, but we spent a lot of time during those years building out marketing. And so we have things we do, like our phrase is, we do mortgages and we do them well. Our e-closing process, we've named it Easy Close. And so we do a lot of internal branding. Yeah. And so we still work on visibility and presence. And I think in today's world, one of the things that we really highlight and focus on is social media posts that we get out for our MLOs to put out, and how do we put those out? And those are a big thing for us. Another thing is we've continued to market in our branches. We have TV screens like a lot of places do, that monitors that run a loop of different products and different messaging to our members. And we continue to have something mortgage focused on those in the loop that they have. So we have felt like that building visibility and presence for mortgage is really important in this low time, because the world's going to change on a dime. At some point, inventory is going to catch up. At some point, rates are going to come down, and you're going to start to have opportunity there. You need to be prepared for that when it gets here, instead of starting to figure out what you're going to do when it happens.
Absolutely. It's like you're reading the Peter Benjamin playbook right now. It's like, absolutely, I love it. I love it. And listen, this is something I think you and I can agree on. We don't have the right answers for this, right? Who knows what
Right.
the right answers for this is?
Right.
But if we don't continue that conversation, right, we're going to get forgotten.
Mm-hmm.
At the same time, we still have that fiduciary responsibility to serve the members in our community, right, or the communities that we serve. Part of that is one of the biggest parts in my mind is helping first time home buyers, fulfill the largest purchase of their life. Really making sure that we are positively impacting the affordability issue that we have right now, really creating opportunities for more and more of our members to obtain home ownership. So, I mean, part of that equation is not stopping the conversation, right?
Absolutely. Absolutely. And I think certainly we're not as focused as much. The credit union overall here is not as focused on mortgage lending as it has been, because we know now's that time whenever we need to kind of retrench and retool and look at our processes. And get the volume that we can, but you've still got to stay somewhere out there top of mind.
Oh, yeah.
We want to be known as a full service credit union, and so you still have to say, hey, we're in the home lending game. And I think for us, and I think this is true nationally, you and I can have this discussion. The issue really is inventory and affordability. Rate certainly plays into that, but the lack of inventory issue is the longer term problem that we've got to solve as an industry in order to really have a robust housing market again.
And you're in like the Winston-Salem area, right?
North Carolina, South Carolina, Virginia is our footprint.
Do you feel like there's an inventory issue in that area? I mean, I feel like I read somewhere that there's a lot of people are moving to that Winston-Salem, Raleigh. I think I saw Raleigh was like one of the largest growth areas in the country. Is there inventory issues there?
Absolutely, there are. Yes, Raleigh and Charlotte are two of the hottest MSAs in the country, and Winston-Salem sits in between those two. So North Carolina economically is doing very well, but we have the same inventory issues that other places do. You've had a lot of the big REITs come in and buy up a lot of the properties, a lot of the first-time home buyer properties, and turn them into rentals. I do too. You've got explosion of multifamily building going on because land is so expensive. So apartments are cheaper to build and probably give you a better yield right now. But inventory. We're running most of our markets. I haven't looked at Charlotte in the last couple of months, but it's an under 2 month marketing inventory supplies where we've been for a long time in this area.
I obviously I'm not. I mean, I know the general area. Winston-Salem. I can't really speak to what it means. From a commute standpoint. But even when I look at the area that I live in, the DC area. I would say, yes, there's a real inventory issue the closer you get to Washington.
Mm-hmm.
But where I live on the outskirts of the area, I mean, there seems to be new construction builds happening or starting up almost a monthly basis. I mean, there's I think it's a 600 unit single family resident neighborhood that's popping up on the backside of my neighborhood, which is. And the funny thing is that they just completed a very similar size build right next to mine. So I find it interesting because you get people who don't want to go further out. Right. That's really where the houses are, right?
Yeah. And I bet those are selling as quickly as they come out of the ground too.
Oh yeah. Which is it's good and bad. But anyways, so I love this conversation and I want to continue on with it, but I do want to switch gears a bit. I've never asked you this question, and it's been something that's been burning in my mind. E-closings, and I kind of gave a little PR thing for you, right? I became like your PR person, talked about how impactful you were in e-closings in North Carolina. But what really drove that passion? I guess that's the big question. what? I mean, you became very passionate about it and very influential, not just in the credit union industry, but also North Carolina in general for all mortgages. But
Yeah.
what kind of drove that passion? What kind of made you kind of say, "Hey, this is important. I'm being in the front of it."
Yeah, I'll say it this way. In my 35 years of mortgage lending, I look at what have we done to the benefit of the consumer in this industry. And we'll create a new product, we'll make some things easier. But if you stop and think from just a technology standpoint, when someone goes to purchase a home now, they electronically sign the contract. Almost all contracts are done by DocuSign. Then you e-disclose most loans. You go into the portal, the lender sends you the docs, you e-disclose them, you sign them, you send them back through. You even upload your documents back into the lender system for most loans now. And then you have the closing and you go to a title agent or an attorney and you sit down with a stack of paper about this thick and you start to sign papers that you've never seen until that moment. If you can e-close a loan, then you have electronic signatures all the way through the process, which is a better experience for the consumer. In our case, we send those documents out 5 to 7 days in advance of the closing in a preview only mode. And so the borrower can look at that package and they can read every document in it and they can ask questions of the attorney, that we're an attorney state in North Carolina, or the title agent, the lender, the real estate agent, whoever they want to talk to about it. They have plenty of time to look at the documentation and review it. And so then the day of closing, we open up the non-notarial docs for them to sign. And so they can sign all those lender forms that we all have, your name affidavit, your loan application, any of the things that are really lender specific. Most of those they've signed something similar to once already electronically in the application package. So some of those things are just an affirmation of what they initially signed. So they can sign those things. And then you bring in a closing agent that helps you with the notarial docs. And in North Carolina, we have just instituted Ron last July. The legislature is still working on that. And we hope by middle of this year, mid 2024, we'll have all the rules and regulations built out so that we can actually start doing those with regularity. And in that case, people can be in separate locations and sign the documents by much like a Zoom call, but it's a secure portal. And so the attorney is still a part of it, the closing agent, the real estate agent is still a part of it. You still have all of the security built in, but you have a lot more convenience for everyone involved. And then the closing takes, our e-closings on average take about 15 to 20 minutes just to sign the docs. Then it's e-transported to the Register of Deeds offices and sent back that way. And so then the seller gets their money quicker, the real estate agent gets paid their commission sooner, the borrower gets their keys sooner. So you don't have typically that like 2 to 3 hour lag where you're waiting for the attorney to run downtown or the title agent to run downtown and record it and bring it back. So it's truly an improvement for everyone. And then, like I say, what I like about it is you have consistency. You e-sign your purchase contract, your disclosures with the lender, and your closing docs. And that's what consumers really have come to expect. It's an unusual process in today's world to go sit down somewhere and sign a bunch of papers.
Oh, yeah. And you're saving the planet.
Yeah, saving the planet. Just the reduction in paper alone, the reduction in FedEx getting a package back. Your documents come back to you as a lender electronically. If you sell to Fannie or Freddie, you upload them to them electronically. It cuts down on your servicing costs on that side. Post-closing issues are decreased. There's a lot of benefits to it. So I am very passionate about it. And Truliant, thankfully, Truliant has adopted all of that and has really leaned into that space.
That's great. Well, thank you very much for walking us through that. Now,
thank you.
Last question I have for you before we pivot to the second segment of our podcast. What keeps you going? What gets you out of bed? You're a person like everyone else, right? And then the ACUMA On Point podcast is really focused on the stories that help drive you and the things that you do to make a positive impact on our industry. But you, like everyone else, you put one foot out of bed every single day. What keeps you going?
I absolutely love to work in an industry that provides people with homes. When I think about home ownership, it stabilizes communities. It keeps, the American dream. I mean, I get to help people achieve the great American dream every day. I have a fantastic team that I work with here, and I love all of them. Many of us have been together for a long time. And it's fun. I love the pace of change. I love the ability to really help people get to that place in their life where they go, hey, we're a homeowner, or you can help them with financing in some way that they need to use their home as an asset to help pay off other debt or to, send a child to college or do any of those things. So I think homeownership is a key to the fabric of the American society, and I'm happy to be a part of that.
Love it. Absolutely love it. Love it. All right, Beth. Well, it's time to transition to the second segment of our podcast, and admittedly, it's my favorite part. This is where we play Jeopardy. We do dad jokes. Sometimes we do just random trivia, and we have you rank stuff. Today, here we are. Valentine's Day is around the corner, so we're gonna do a little Valentine's Jeopardy. Now, I getting ready to pull up and share my screen real quick. Now, people, obviously, our listeners can't see the screens, but it's a standard issue Jeopardy board, with 5 categories and points ranging from 100 to 500. Again, this is standard Jeopardy. Okay. And again, this is Valentine's Day Jeopardy. Now, for the sake of time, for the sake of our podcast, you do not have to say what is or who is, all that stuff. But we'll just flow with it. Sound good? And we won't hit every single one of these. We'll do a handful of questions, and we'll kind of wrap things up after that. Sound good?
Well, I'm looking for the music. Where's the do?
We'll add that in later for you. Now, Beth, you are going to be team 1. And Cameron, because you're going to compete against Cameron, you're Cameron's team 2. Now, for our listeners, the 5 categories that we have are love songs, random, celebrity couples, love around the world, and Valentine's vocab. Now, Beth, since you are our special guest, you get to go first. Please select a category and a question.
I think we'll go with random for 300.
Random for 300. I think I did this one. All right. So, in the bird world, which species is known for forming lifelong monogamous pairs and is often associated with love and fidelity?
How about a Canadian geese?
A Canadian goose. That's wouldn't have thought that. But let's see. The answer. The correct answer is. Oops, I'm on the wrong screen. The correct answer is. What are swans? You know what?
Swans.
Oh.
I feel like I should give that to you.
Big waterfowl. They're both big waterfowl.
Big waterfowls. I'm often criticized for being too mean.
But it's Valentine's, Peter.
That's right. Love is in the air. I'm gonna give it to you. All right, so you get those points. Excellent. All right, so Cam, go.
All right, I'm gonna do random for 400.
All right, stick with random. Random for 400. In astrology, which zodiac sign is associated with the dates between February 20th and March 20th?
I should know this, but I don't.
I'm sure you can guess.
Yeah, I'm not sure if it's going to be right. Aries.
The correct answer is. You sure you're going to stick with that one?
I don't know, but I'll go with it. I don't think it's right, but I don't.
So this is Valentine's Day trivia.
I don't know. That's okay.
We're gonna stick with Aries. Or Beth, do you want to guess?
No, I'm going to stick with Aries.
Okay. The correct answer is. What is Pisces?
Oh, okay.
Sorry, Cam.
That's all right.
I'm pushing the negative. Negative 400.
Gave it a shot.
You did. It was hey, look, I was nice and tried giving you a second chance.
I know. I just wasn't sure. That's okay.
That's all good. It's all good.
Applause to you for not whipping out your cell phone over there, Cam.
Yeah.
There you go. We know she's cheating. Beth, up to you. Beth, it's back to you.
Well, let's move over to love songs for 200.
Love songs. See, Beth, by the way, you were the first person in the history of On Point Jeopardy ACUMA's On Point Jeopardy, to go with either middle of the road or lower numbers. Everyone always starts with 500.
Yeah.
Always. But I like your strategy. I like your strategy. Let's go easy, build up some points, because as you can tell, you're already winning. So I like I like this strategy. You said Love Songs 200?
Yep.
In Ed Sheeran's Thinking Out Loud, he sings, I'm not going to sing this. And darling, I will be loving you till we're 70. Can you complete the next line?
How about, is it your soul is evergreen or something like that? Loving you until you're 70.
Sing it. Sing it.
No, I'm not going to sing it.
All right.
This is not karaoke. This is Jeopardy.
Ooh, you just gave me an idea. I love it. All right. So one more time.
And darling, let's see. You're 70. Well, I'll tell you what, we'll go with this one. How about people fall in love in mysterious ways?
Okay. What is, and baby, my heart could still fall as hard at 23?
Dang it.
I'm sorry, Beth.
It's okay.
That's a hard one.
That is a hard one. I would not anticipate that being 200, but good news is you're still in the lead, which is fantastic. All right. So, Cam.
I'll go celebrity couples for 300.
Celebrity couples, 300. This former One Direction member has had solo success with songs like Watermelon Sugar and Adore You. Who is he?
Harry Styles.
Harry Styles. And the correct answer is, who is
ding, ding,
Harry
ding.
Styles? Look at
Gain
Cam.
some points back.
Woo! All right. To recap,
All right.
at the end of 2 rounds, we have Beth Eller with 100 and Cameron with negative 100. All right, let's do one more round. Beth.
Okay, since it's the last one, we're going to go love songs for 500.
Ooh. And this is a hard category.
Okay.
That's a hard category.
In John Legend's All of Me, he sings about his love being all your curves and all your edges. What does he mention next, emphasizing the completeness of his love?
All your imperfections.
All your imperfections. All your perfect imperfections.
Perfect.
Look, I'm going to take it. Look at you. Woo, Beth Eller. Nice job.
Maybe I should have done the 500s first all the way across.
There you go. See, apparently this is reversed and they're all going to be easier for you. Cam, please.
All right. I'll try celebrity couples for 500.
I think Cameron found her
can't
niche.
win.
You found your niche, though.
Yeah, but I can't win.
It's not always about winning, Cameron.
Yeah.
These 2 actors from the Netflix series Outer Banks became a couple, both on and off the screen. Who are they?
Chase Stokes and Madeline Klein. I'm good at this category.
Yes, you are.
Chase Stokes and Madeline Klein. Okay, good job, Cameron. Just for giggles, I want to see how good you are at this. All right, so this,
Okay.
So Cam,
Yeah.
I'm going to ask you 400. I'm going to go celebrity couples for 400. This is going to go right to you. Let's see if you know this. Prince William and Kate Middleton got married in a highly publicized royal wedding in 2011. What title did Kate Middleton receive upon their marriage?
Isn't she princess? Or no?
I don't think so.
She's not?
Mm-mm.
I don't know. I don't follow the royals.
Just joking. I don't know. Beth, do you know?
Is she the Duchess of Windsor?
Duchess of Windsor?
Maybe.
I think she's the Duchess. I don't really know.
I don't follow the royals.
Duchess of Cambridge.
Oh, okay.
And then she was a Duchess. I didn't know what.
No.
All right, Cam. What more? Just for giggles, Cam. Now I'm really in to see if you know this, because I'm impressed.
I already know it.
All right, so let me read the song. Or not read the song, but read it. This pop sensation, famous for hits like Umbrella and Diamonds, has been romantically linked with rapper ASAP Rocky. Who is she?
Rihanna.
Rihanna. Let's see. The correct answer is Rihanna. All right, Cam. Nicely done. Nicely done, Cam. So Cam, if you would have just stuck with this category, what you know best, you probably could have won this thing.
I'm thinking he's right.
Maybe.
Oh, yeah.
Now I know.
Now you know. And we also know that Cameron is really good at celebrity couples.
Yeah.
As long as they're not royals.
Yeah, there you go.
She does not follow the royals. Well, Beth, thank you so much for being on our podcast. This is something, fun that we like to do. And it's always great to sit down with amazing people like yourself. Again, thank you very much for being here.
Oh, Peter, my honor. Thank you so much. I've really enjoyed it. You guys do such great things at ACUMA. Thank you for what y'all do for our industry. You keep hot topics in the forefront of everyone's mind, and you push the edge a lot on making sure that we have knowledge and understanding. And it's always good to learn, And you guys do a great job of that. Thank you.
Thank you, Beth. Thank you. And Cam, thank you very much for being co-host. And Cam, celebrity couples is Cam's hot topic. That's what she knows. But Cam, thank you very much for being the co-host. And
you're very welcome. Thank you for having me.
It could be a theme for like our workshop or a summit.
Stump Cameron on
Stump Cam.
That's right. On celebrity couples. There you go. Well, and to everyone else, thank you very much for taking time out of your schedule to listen to our podcast. We appreciate your time. We know how busy you are, and the fact that you took some time out of your schedule to really be part of our family means a lot to us. Other than that, everyone, be on the lookout for the latest and greatest happening over at ACUMA, and take care, and we'll see you next time.
Thanks for listening. We'll see you next time at the ACUMA On Point podcast. If not already, be sure to subscribe and give us a 5-star rating. For more great episodes and information, be sure to visit us online at acuma.org, and to get the latest updates, head over to our LinkedIn page.